The world has been facing an economic crisis since the beginning of 2020. Many countries, including the US, have been on the edge of a recession for a while. With the current state of the economy, people are wondering when will the recession hit. To answer this question, we need to understand what a recession is and what factors contribute to it. We also need to look at the economic data to determine if the US is in a recession. Finally, we need to look at which industries are most affected by a recession and how to prepare for one. What is a recession? A recession is defined as a period of economic decline that is characterized by a decrease in gross domestic product, GDP, and an increase in unemployment. It is typically caused by a combination of factors such as a fall in consumer demand, a rise in production costs, and a decrease in investment. During a recession, businesses experience a decrease in sales and profits, leading to layoffs and decreased wages. Recessions are usually measured by economists using a variety of metrics such as GDP growth rate, employment rate, and inflation rate. A recession is typically identified when the GDP growth rate falls below 2.5%, the employment rate rises above 8%, and the inflation rate falls below 2%. Is the US in a recession? The US economy has experienced a significant downturn since the beginning of 2020 due to the coronavirus pandemic. In the second quarter of 2020, the GDP fell by 9.5%, the unemployment rate rose to 13.3%, and the inflation rate fell to 0.1%. This indicates that the US is in a recession. It is important to note that recessions do not always follow the same pattern. For example, the 2008 recession had a different impact on the US economy than the current recession. In 2008, the GDP declined by 3.7%, the unemployment rate rose to 10.2%, and the inflation rate rose to 3.8%. This suggests that the current recession is more severe than the 2008 recession. What does the economic data tell us about a potential recession? Experts have been closely monitoring the US economy since the beginning of 2020. The economic data suggests that a recession is likely to hit the US economy in the near future. The GDP growth rate has been steadily declining since the beginning of 2020 and is now at 1.5%. The unemployment rate has been rising and is now at 6.9%. The inflation rate has also been decreasing and is now at 1.8%. These figures indicate that the US is on the brink of a recession. If the economic data continues to decline, a recession could hit the US economy in 2021 or 2022. What are the effects of a recession? When a recession hits, it can have a devastating effect on the economy. Businesses are forced to lay off workers, leading to increased unemployment. This can cause a decrease in consumer spending, which can lead to a further decline in the economy. Additionally, businesses may be unable to pay their employees or may be forced to reduce their wages. This can lead to a decrease in the purchasing power of consumers, further worsening the economy. It is also important to note that a recession can have a long-term impact on the economy. For example, the 2008 recession led to an increase in the debt-to-GDP ratio, which can have a long-term effect on the economy. When will the recession hit? At this point, it is difficult to predict when the recession will hit. However, based on the current economic data, it is likely to hit the US economy in 2023. The US government has taken steps to mitigate the economic impact of the recession. The government has passed several stimulus packages to support businesses and individuals. Additionally, until lately the Federal Reserve has been cutting interest rates to encourage businesses to invest and increase economic activity. However, it is important to note that the economic data is constantly changing. If the economic data continues to decline, the recession could hit sooner than expected. How to prepare for a recession? It is important to prepare for a recession to minimize its impact on businesses and individuals. Small businesses should create a contingency plan to ensure they are prepared in the event of a recession. This plan should include strategies to reduce costs, such as cutting back on non-essential expenses and reducing staff. They should also review their debt and make sure they are able to pay it back in the event of a recession. Individuals should also prepare for a recession by creating an emergency fund. This fund should include enough money to cover at least 3 months of expenses. Additionally, individuals should review their debts and make sure they are able to pay them back in the event of a recession. What industries are most affected by a recession? Recessions can have a different impact on different industries. Generally, industries that are heavily reliant on consumer spending are more likely to be affected by a recession. This includes industries such as retail, hospitality, and tourism. Additionally, industries such as manufacturing and construction may also be affected by a recession. It is important to note that the impact of a recession on an industry can vary depending on the type of industry. Some industries may experience a decrease in demand while others may experience an increase in demand. What should small businesses do to survive a recession? Businesses should take steps to ensure they are prepared for a recession. They should review their debt and make sure they are able to pay it back in the event of a recession. Additionally, they should create a contingency plan to reduce costs and increase efficiency. This plan should include strategies to reduce costs, such as cutting back on non-essential expenses and reducing staff. Businesses should also review their supply chains and make sure they are able to source materials and services in the event of a recession. Additionally, businesses should diversify their customer base to ensure they are able to survive a recession. How to mitigate the economic impacts of a recession? It is important to take steps to mitigate the economic impacts of a recession. Governments should implement economic stimulus packages to support businesses and individuals. Additionally, the government should increase funding for small businesses and provide incentives for businesses to invest in research and development. The central bank should also take steps to stimulate the economy. This can include cutting interest rates to encourage businesses to invest and increase economic activity. Additionally, the central bank should implement quantitative easing measures to inject money into the economy. Conclusion: recessions can have a devastating effect on the economy. It is important to understand what a recession is and what factors contribute to it. Additionally, it is important to look at the economic data to determine if the U.S. is in a recession. Finally, it is important to understand which industries are most affected by a recession and how to prepare for one. By understanding these factors, businesses and individuals can take steps to prepare for a recession and mitigate its economic impacts. If you enjoyed this content, consider subscribing to our channel for more videos just like this, on personal finance and the state of our economy. Thanks for watching, and we will see you again soon.